Hello and welcome to another installment of Liberty Nation Swamponomics videocast. I'm Andrew Moran, Ellen's economics correspondent. Each week, I dive into the morass of top economic news stories and fish out compelling narratives, or I retrieve fallacies that have been accepted as conventional wisdom by the swamp creatures for years. This week, is the NASDAQ Composite Index about to face a sharp crash? Since the Federal Reserve released its minutes from the December Federal Open Market Committee policy meeting, showing that it is ready to accelerate quantitative tightening to fight the rampant inflation occurring in the United States economy, the financial markets have been a wreck. From a sharp sell-off in the first trading week of 2022 to many bubble assets hinting at deflating, it has been tough to be an investor, especially if you bought at or near one of the many fresh record highs. But the most compelling index to monitor in this environment is the NASDAQ, a tech-heavy index that has been dominated by just a handful of names, including Apple, Google, Microsoft, and Meta. The NASDAQ slumped 4% in the first few sessions of the year. This is in addition to the 4% loss over the last month. What is fascinating is that close to a record number of tech stocks have cratered by about 50% according to Sundial Research. Moreover, about 4 in 10 companies on the NASDAQ have seen their market capitalization rate slashed by at least 50% from their 52-week highs. And some anticipate additional losses as hedge funds with massive holdings in some of these enormous companies are offloading and selling at the fastest pace in a decade, buoyed by the Fed's policy minutes. Jason Gopfert, the chief research officer at Sundial, described the situation perfectly, saying, quote, "Valuations are at historic highs, companies are raising billions based on fairy dust, and the Fed is signaling a tightening cycle. All of these are scaring investors that were on the cusp of a repeat of 1999-2000. In other words, the dot-com bubble." As Liberty Nation recently reported, Cathie Wood's ARK investor has been one of the biggest losers on the street over the last year. In the first trading week of 2022, the ARK FinTech Innovation ETF has slumped nearly 10%. The ARK Space Exploration and Innovation ETF tumbled about 4%, and the ARK Genomic Revolution ETF has fallen about 10%. This is what happens when the Federal Reserve injects trillions of dollars into the financial markets in less than 2 years, creating junkies and addicts on Wall Street who have become dependent on cheap money to survive and thrive. With the Federal Reserve poised to raise rates and scale back monetary expansion, or at the very least slow down the printing press, investors are seeing the writing on the wall, and they're taking their profits and running away from the inevitable market meltdown that could occur this year. But is this even surprising? When most of the market gains from April to December were driven by just a handful of tickers like Apple and Tesla, this was bound to happen. It was an inevitability. The rich kids are seeing the spiked contents in the punch bowl increasingly diminish. The only thing left for traders to do is pounce on stocks with good old-fashioned balance sheets. Or, who will benefit from the trillions being employed by Build Back Better? That's it for me this week. Please read my full Swamponomics column where I discuss the December jobs report, Cathie Wood's ARK, and lumber prices hitting 7-month highs. Thank you.
We're doing it for real, really real. Liberty Nation.
And Jeff Charles, contributor for LibertyNation.com.
I think we're starting to make an impact. Liberty style, fight for freedom.
Maybe tracking polls sponsored by Liberty Nation for Thursday.
Mentioned by Dan Bongino, Rasmussen, Jordan Peterson, and
I
others.
can do it again if you want me to.
Cited in Mark Levin's American Marxism.
I think we're starting to make a really big impact. Get noticed. We're doing it. Rock on. I'm gone.